Happy Sunday, apprentices. So no matter what you do for a living, there's always going to be a time where you have to try something new. Doesn't matter if you're an accountant who gets some new software, or you're a plumber who now you have to learn a whole new, different type of material. Well, it's the same for us traders. Every now and then you got to add a new strategy to your playbook. That's what's next on today's show. Trading Forex or any other financial instrument carries substantial risk. The topics discussed on this show are the views of the host and the producers only. You should consult with your financial planner before investing in Forex or any other financial instrument. Don't be a dumbass.
Welcome to Day Trading Plumber, episode 51. I'm Matt Simpson, but I've been doing this for 51 weeks.
51 weeks. Next week, dude, we're going to celebrate. I got some scotch. You're going to shit your pants.
It better be Scotch. You know, it has to be from Scotland.
I know.
It's like champagne.
It's red label. No, it's not the red label.
Okay.
I got the more expensive one, the black label. We'll post some photos, so make sure you follow OFP Matt at Instagram. Interesting night tonight in the AMA. So we did some live trading, and I took a loss. But ran out of time, and I made the money back on the second trade, and about a little bit. But it was actually pretty fun to do. The risk of trading live, right? It sounds like a awesome concept, but you can't control what the market does, especially at 7 p.m. Mountain Standard Time. It's pretty boring. I mean, the Asian session can be pretty boring, especially when you don't have any big fundamental news, driving price. Now, one of the best times to trade this Sydney or Asian session, mostly Sydney, is when you got a rate decision coming out on the Australian dollar. Usually New Zealand pairs and Australian dollar pairs tend to move quite a bit, and that's what I did not last night. That's what I did last night on the Australian dollar rate decision. Now, I don't gamble and put in trades before the decision like so many people in these chat forums do. Like I had a guy today took a screenshot of the news coming out. Oh, I forget what it was. It was the jobs jolt, the jobs that came out. I got my days mixed up. It's either today or yesterday. And he sends I really hope my long positions on my USD or Euro USD positions just go flying forward on these announcements. And I'm like, dude, hope. You said it right in your text. You're hoping this helps your positions. And don't get me wrong, when you swing trade or position trade, you have to weather those storms. But it's when you see these news announcements coming, hopefully you're already prices, you're going from one level to the next. These are just little blips on the radar. If you have a tight stop loss, you're probably going to get stopped out because it gets really wishy-washy right before and typically right after. I mean, the best way to trade those would be wait till the news. And then if it's positive news, take a long position when it settles down and think over time it's going to move it to a new level. But I've been trying a new strategy this week. And
last week.
Well, pretty much been moving this way because I've been noticing the markets are favoring momentum plays. Now, momentum trading's a highly successful style of trading most of the time anyways.
What's the difference between momentum and trend?
Well, momentum would be, it's more breakout. So trend is more, if a market's moving in a trend and it's clearly identifiable as a trend, you're going to trade the momentum with that trend. So, for instance, when a price goes sideways, consolidation phase, you're not in any trades. You are waiting, you draw a box around that consolidation, the high, the low of it, and you're waiting for a positive breakout momentum moving that way. And then there's a lot of momentum indicators. It doesn't necessarily mean you're trading with the trend. For instance, a lot of the reversion of the mean style trading on divergence is a momentum trade. You're just going, it's lost momentum, right? Divergence is basically a momentum indicator going up while price is going down. Now you have a divergence between momentum and price. Usually is a indication that a reversal is coming. That reversal meaning trend. So the strategy I'm testing, I kind of want to talk about the key elements. And it's kind of scrambled me all up the last 2 weeks. Because, I mean, anytime you try something new, it messes with your schedule. It messes with that comfort, right? Like we said at the beginning of the show, when I was in plumbing and all of a sudden groove systems come out. Today, we know Victaulic, GrooveLock, groove systems have greatly helped the industry in speed. I'm not too sure they're cheaper.
Definitely not.
But the offset's the labor, right? That's the gamble. And, you know, I think that gamble's worked enough where companies have gotten more and more comfortable with, let's go with groove systems. And engineers in the beginning of this really didn't want their firm's name on a problem. But let's just face it, you know, the 23 years I was in the trades, groove systems have become pretty solid way of building plumbing systems. More so hydronic, but it's kind of taken over the large bore copper phase of plumbing. Now, when it first came on board, you know, there's always I'm resistant of change. I got to have this expensive tool, you know, and then the feedback the purchasing department, everyone's getting who made this decision. Fuck, I got to groove this damn groover. We don't have enough heads for it. Or we broke the head. Now we're dead in the water. Let's just go back to welding. Right? There's always resistance of change. Why would you design, put the time in, the effort to build a new trading system if you have one that works or a few that work? And it's not like I'm ditching my old trading systems. That's the struggle right now, because that familiarity of, let's just go back to pivot points, and training your mind when it's at that R2 or S2 and looking for that reversion back to the pivot. It's not that those plays aren't happening. They're not in the probability scales from the backtesting results. So now I got to add something to the playbook, right? I'm going to use a term that Mike Bellafiore uses in his book, One Good Trade, the playbook, right? And he has a book called The Playbook.
He's all over my Instagram feed, by the way, now.
Yeah? Good.
There's something in the algorithm. He's now has sponsored content.
Right.
Every day I see him.
Yeah, I mean, they're pushing their stuff. But it's good stuff, right? It's not like he's some joker out there putting shit out. His books are amazing. He's a good writer. If anything, it motivates you to be better as a trader. And I will give him a little credit. After reading the One Good Trade book, it motivated me to start this new trading system where I have tighter and tighter entries, and I want to be in and out of these trades each session, if not each day, which it's a 24-hour day in Forex. 8, 7.5, 8-ish, I'm sleeping. So I don't want to be in trades when I'm sleeping. Not this strategy. So, back to the mechanics of it. First, you got to come up with, just like if you're building a business plan of this strategy. Okay, it's got to be a day trading strategy because I don't want to be in trades overnight. So, day trading strategy. So now I want to look for intraday moves that give me a good chance. Pairs that are going to move that day. So there's a process to which pairs move. Which pairs move when. That's part of the strategy in itself that, a lot of people just want to go to YouTube and see if price does X. Well, to build a trading system or, a good strategy, it starts with what time of day you going to trade. How many pips are you shooting for? What's your risk to reward that you want to aim for with this? All these variables kind of point you or should point you into the basic fundamentals of that strategy. So I know I want to be in the trade and out of the trade fairly quickly. So it's going to be intraday moves. Now I have to kind of zero in on which pairs move when I'm trading. And this is where a lot of people kind of get lost, because if you can't sit and focus and trade because you're too busy at work, this is kind of the struggle we're having with the Journeyman channel. People expect the markets to be active when they are available. It's not the case. And just like when I first got into Forex, and we know the story. I got into it because, hey, the market's open 24 hours a day. I could trade when I get off work. And a lot of people come into Forex thinking, well, it's 24 hours a day. So I put my kids to bed. I got dinner done. And, I'm ready to trade. The wife's off my ass. So they sit in front, and then they find themselves forcing trades in the slowest part of the day. Well, it's kind of the struggle we're having in the Journeyman channel. I'm trying to get quicker and tighter with stops and entries, which doesn't give me enough time to be able to get those signals out. Now I could easily just turn on the EA that sends the signal when I hit buy or sell. Problem is these trades move so fast, and I'm moving the stop loss so fast, it would just be so annoying because it'd be like, oh, trade opened, it gives you all the information, entry price, stop loss, take profit, if I have them set. Most oftentimes, I don't have those set yet, especially with this strategy. I'm like on a 1-minute chart, looking at candlestick and looking at a Renko chart. Last thing I want to do is take my eyes off of that, make a video, type in and then by the time I come back, it could be gone. The hard part is I feel like I'm putting a signal out there. Hey, we're getting pretty close to R2. I'm going to hit a sell. I'm just going to put in a sell pending order there. I got to watch price action at that level. And then a lot of times if it breaks above, so I'm just going to have to really work on differentiating the two. But this new strategy, it takes a lot of time to learn something new. It's taken me 2 weeks to really kind of go, okay, from 5 a.m. to 11, I can't do anything. No distractions on the phone, no making video content, no wandering off and watching the news, where, if you set up some longer term swing trades, you had a lot more time. But now I want to hit the market when it's hot to the first phase of this. pairs that are in play. We have to be at our trading desk, ready to trade when those are moving. Otherwise, you can't go, oh, it's 11. I slept until 11. I'm seeing a huge volume drop off between 11 and 1. Near the end of the day, price doesn't move violent or fast, but it moves. That's like the creeper hour. Price just kind of starts creeping back.
Is that a Clayton Allen term?
Yeah, we'll make a whole series about it. But yeah, building this new strategy, the hard part is getting down to a defined set of rules. Because let's face it, if you want to back test, you have to have some sort of defined rules. Because otherwise, you just do 5 trades one way and 5 trades the other way. And if you're not clearly documenting what rules got, how do you repeat it, right? I mean, it's part of the process. It's just like if you solved male pattern baldness randomly and you rubbed it on your head, you start growing hair the next day and you're like, shit, what did I do again? How much of what? And you just could never get it back. Wouldn't that suck? You made 1 bottle of it and you could have been a billionaire, but
I wouldn't know. I can't relate.
Just threw a bunch of shit in a bottle. It worked. What was it? I don't know. That's kind of like trading. You have a good trade and you're like, oh, I'm going to do that every time. Well, what did I do? I just hit buy randomly. Wow. Well, that's luck. So the frustrating part is, and I'll walk you through the process. I see very good potential on the Renko charts, which we talked about last week. If you go to intraday moves on Renko charts, it's very easy to see a process at which price moves, some simple moving average crossovers, which is pretty easy. No, it's no secret out there, right? Moving average crossovers is very popular entry type and exit type trading. When you use those on a Renko chart and, you get these big moves and you came up with a set of rules, we and some of the guys in the channel, Hank really helped out with his homework assignment. It tested out 60 to 70% win rate. And I'd say probably 30% of losses were actual losses. The rest were break evens. So we have something very good here. Problem is, when you live trade a Renko chart, the price action, especially on a 15-minute chart, the price action's really about 30 minutes ahead on average, because a Renko chart's based on price movement, not a time. So where a 15-minute candlestick, each candlestick's 15 minutes, but a Renko chart is price moving a certain distance, not in 15 minutes. Just price went from X to Y, and now I'm a green bar. You're always going to be left with price is within that green bar moving up and down, which could be on a 15-minute chart anywhere from 20, 30 pips. So now you could kind of zero in on a 20, 30 pip window. However, in Forex, with a spread, and if you're trading with any kind of size, 20, 30 pips it's too far out to be able to zero in. It'd really get the same results you get if you just put fake trades on the Renko chart over and over again like we did for the back testing. However, we have something here. Now, this week I've kind of zeroed in on, okay, we have the trigger on the Renko chart. However, price is somewhere within this 30, 40 pip range. Now I'm going to go down to a smaller time frame candlestick chart and see if I can find some correlation and try to get price at its cheapest in there. I tried a few just blindly, just saying, it doesn't matter where it's at. Or I even tried a few where I put a pending order at the level at the top, so we just would never get into the trade if it just completely reversed. I just didn't see the same results in live. So then this week I moved down to a 1 minute Renko chart, which is pretty close. Did a couple 1 minute candlesticks, which we're zeroing in. And I've started to see some really good progress the last 2 days with the live trading. Now it's down to me, the trader, not getting shaken out in that magical, 5 to 10 pip. Right when you open, it's just going to shake you off. It's going to move against you, and it's going to move your way, and it's going to move against you. That's just part of trading. It's like what we did in the live event tonight. It's just, you just got to get ready for it to move against you. And what a lot of people don't get ready for is, man, it's moving in my favor. Now what? Do I go to break even? Well, that's where all these variables, that's where I'm at right now on the phase, is getting these variables kind of set so then I could go back to those back testing spreadsheets, do it 100 times on all the major pairs, and really understand the probabilities. It's really easy to do on the Renko chart, but price action isn't going to move that way. The really crappy part is you can't do the replay on a Renko chart either. It's just going to be something you got to live trade and log. It's difficult. So one of the big reasons why I'm switching to this or adding this to my playbook is with the volatility we're seeing and the basic destruction of the dollar, and who knows what that's going to entail in the currency markets in the future, is I'm not so comfortable holding so much drawdown anymore.
Hold on, that's interesting. Because your entire premise, since you and I have been talking about trading for the last
is get used to drawdown.
Year and a half, is me understanding drawdown.
Yeah, I mean, it is one of the controversial where most of my critics go, dude, you're crazy. And yes, I've spent better part of a decade teaching myself to be okay with it. And, what the hell was that, dude? You scared me. You got to tell me when you're going to do that.
You just jumped out of your seat, and that was awesome.
I thought we were under siege.
It's a big moment. You going against drawdown, or are you accepting and changing your drawdown strategy is a huge moment.
It's not that I think a trader should just absolutely despise drawdown or not go through the process of learning how to deal with a trade moving against you. It's just the markets are changing. We must adapt as traders. For the better part of this bullish run from 2008, I got really comfortable with a certain percentage in drawdown.
And because you're leaving that tolerance for drawdown, it's becoming more shallow. How does that affect your rollover strategy?
Well, I'm not doing rollovers. This strategy I'm building, no rollovers. Period. Tight stops. And it's not like I'm never going to do a rollover again. It's just I don't know enough about this strategy, and I'm trying to set new business plan. The business plan is it's either right or you're out with this strategy because it's a day trading strategy. I don't want to get caught, and if it does move against me, I already have a set stop loss based on the back testing and the probabilities. Now, this is probably the most popular way out there because so many traders and trading gurus will tell you they've just decided drawdown is just not part of they don't want to take that pain.
They don't want to manage it.
Yeah, or where I used to say, the entry's not as important, to where if you plant these seeds at really good levels and it does move against you, it's probable it's going to come back to that level. pivot points, support and resistance. Even if it breaks through, like let's say you buy on support, which we should as traders. You buy ahead of support because it's highly probable it's going to bounce and you're in that trade. Now, what if it breaks through? Well, what do breakout traders wait for to go short? The pullback, the retest. If you bought at support and it pokes through, it shoots through, well, now you got the retest to get you pretty close to break even if you entered right on that buy. Now, if you bought 20 pips before the support, it's probably not going to retest back past unless it's a false breakout. These are all those things you got to try out. And that was more of the rollover strategy, right? If it breaks out on you and you can catch that pullback with a rollover trade, or if it didn't break out very far and it comes back and retests perfectly, you just got to be at your desk and take that break even. You know, it's trading. So with this strategy, I'm being super tight with stop losses. So the win percentage shouldn't be that high, right? I know the back testing is showing it pretty favorable. It's a winning strategy. Let's just say it's 60% winning strategy, and we're running a 3-to-1 risk to reward ratio. So it's a highly profitable. Only 30% of those 40% losses were actual losses. That was on the Renko chart. Now we got to deal with, we're not going to enter perfect price where these Renko levels are. So it's just dealing with that 20, 30 pip, how to get the best price while you're in that zone. That's what I'm trying to zero in on right now. Yeah, the position sizes are pretty big because scalping, in my opinion, it's better to have a bigger position if I have a really tight stops. The risk is the same. I could lose $100 putting a small position on and giving it lots of room. And then eventually, you know, like your swing trades, if you're going to give it 30 pip, you're going to down your position because you should be looking for a bigger, longer move. I'm only looking for 20 pip profits on average, which is after 100 trades of letting it run, waiting for price to come back. That was pretty much the sweet spot. And I'm running with a 3 to 5 pip stop. It's either going to work. Now, what's really tough is picking that perfect spot. That's what I'm struggling to do now because I've been a swing trader for so long. And it's like, we're retesting the R2. Just throw in that sell trade. And if it blows through, I'm going to trade it back to R2. I'll worry about that later. But this new strategy, I got to train the brain a little different. And I want to try to nut within a 5 pip entry. You know, hopefully 3 pip entry. Not easy to do. Quite honestly, I've never seen a trader in real life. I've heard of them. I know a lot of people say they can do it. I know if you go on some of these trading podcasts, there's guys going, yeah, I scalp all day, make 2% a day for the last 20 years. I haven't seen their MyFX book. But I am determined to try to get consistent at it. That's next level. And I'm not doing it because I need to turn $1,000 into $1 million in a year. Quite honestly, I'm going to scale up once I'm consistent. You know, I'm doing a demo trade. I'm a 10-year veteran trader, and I'm demo trading. This is a big lesson for you guys. You're trying a new strategy. Don't do it with your live money. Even though you've been trading, don't get me wrong, it's kind of embarrassing, you know, some days where I'm like, yeah, it's demo. But I know how to treat a demo like it's real money because I've done both. Problem is, it's just too risky, especially scalp trading. You know, when you've been a historical swing trader, It's just too risky. And, you know, the goal I'm setting for myself now is I have a $50,000 account demo, which is going to be what I start with a cash account. The challenge is going to be to make $300 a day consistently for a month, which would, you know, net you $78,000 a year on a $50,000 account.
260 trading days in a year.
260 trading days a year, $300, 78,000 and change, which is about 156%. Now, I'm not planning on, when I do this, I'm not planning on compounding. I'm going to drain the profits every month. So it'd be a true 156%.
For cost of living.
Yeah, because what I really want to work on is, okay, I have a cash account. I have a decent amount of money, 50 grand. Can I cut my expenses? 78,000 a year. If you don't have much expenses, you could still slowly add to that capital base and live off of it. Now, I know a lot of people are like, fuck, I got my house payment. What if you worked on top of that? I don't know anyone that couldn't use an extra 78, 80 grand a year. What if you just took 40 and then now you had that 40 or 50, now you got 90, probably incrementally raise that $300 a day to almost $600. You know, if you hit 100 grand, it's the exact same trades to 600 a day. Now you're making 160 a year, just under, right? So you could see how you could scale it up. Or you get your Christmas bonus, add 10 grand to that 50. That's what I'm trying to work on, that kind of strategy. Because we get a lot of traders who want to quit their job. And one of the things is I get asked all the time, like, if I want to be a full-time trader, how long is it going to take? You know, they keep putting like there's a plumbing apprenticeship to it. And I tell people, well, statistically, you're not going to make it. So get over that. 2, you probably should have a year's worth of your expenses saved. That's not risk capital. So if you spend $8 grand a month, you're going to need $8 grand a month saved, at least maybe 10 months. So 80 grand. Do you got 80 grand in a savings account outside of what you're going to put as risk capital? And then you're going to have to eventually, you got to have some sort of cash account, and you probably should set it up as business. I'm not a tax professional or a business consultant in any way. Now you can withdraw from that company. You set it up as a business, you can pay yourself a salary. Now, what's funny is, you know, people that aren't in the business world or self-employed world, they think, oh, I made $7 grand this month. Like, you get $7 grand. No, you got to pay taxes. You have expenses. You have, you know, all these other things that come up. And you need to grow. If that $50,000 account, let's just face it, if you can consistently make $300 a day, 260 days a year, making $78,000, you're not growing that account. So you're not giving yourself a raise if your expenses are greater than that $78,000. And let's just say it's pretty freaking phenomenal if you can do that all year long. But that's the challenge I'm putting on myself. That's what hopefully we could share in the show, the path, right? The content.
Well, 1% a day on a 50 grand account is $500. That's a day.
Maybe we should call it the 1% a day and add it to the 1% club.
Forex1percentclub.com.
Yeah. In a lot of those videos, he's like, I highly advise you not to go for 1% a day. I think it'd be a great challenge. It'll be a fun process. For me, I want to take it to the next level. I'm a full-time trader now. And since the separation, since, you know, a lot of personal things, I haven't been trading a sizable account. I've had to separate all my assets. My lawyers tell me don't, not until, things are settled. Live off the cash you're making, right? Or the cash you have. And, it's making me itch a little bit. So that's what I was like, I could take 50 grand cash I have, and why not try to make a decent monthly income off of it? And then let's talk about that experience. What strategies would I trade to make a $50,000 account not only grow? How do I manage that risk? Because let's just face it, I don't want 20% of my $50,000 in drawdown at times. Not if I'm going to use it as an income type strategy. So I'm kind of throwing a dart on the wall and saying, I want to do what all these people on Instagram and shit say they do. But I'll be the guy that actually shows you the trades, gives you my FX book, shows the wins with the losses, and then, it could just be a bomb. But it's not like I put 50 grand in the account yesterday and I'll go, let's try this out. I'm going to do it on the demo consistently. Then when I move it over to real money, it's going to probably not be $300 a day. Even if I've done it for a month straight on a demo, I'll probably scale into that a little bit. Because just like I tell all of our listeners and followers, this is not easy. It's like, what did we say a couple shows ago? I don't think I've ever heard someone go, yeah, I want to be a pilot. And then they expect to be flying a 747 to Europe at night in a storm a week later. And no one would, right? No one's going to be like, dude, have you seen a cockpit? I'm not going to learn that in a day. Have you seen some of these trading platforms?
It's the same thing, isn't it?
It's a fucking cockpit. Probably worse, right? I mean, I'm not a pilot. But pilots, wheels up. Trading's not so. There's not like a button where you go, price will go up. Pilots got to deal with a lot of variables. Don't get me wrong. Weather, wind, idiots on the plane.
You're talking about commercial pilots.
Right. Yeah, I mean, it's not easy. You're not going to learn it in a week.
When I fixed avionics gear, I had a conversation with a captain, and that's an O3 in the Marine Corps. Flew F-18s.
O3.
Yeah.
Officer.
3, correct.
What's an E3?
Is enlisted, and that's a lance corporal.
What's E4?
Corporal. They don't want to hear us go through all of them. Anyway, I asked him if he was ever going to get married. And he said, hell no. I'm a fucking pilot, dude. And I immediately understood. He didn't need to qualify the statement. I got it.
So you're saying pilots,
they're going to be...
even in the Air Force?
Marine Corps. Pilots are going to be just fine the rest of their lives.
So who goes into the Marine Corps and goes, I want to be a pilot? Wouldn't you just go to the military or the Air Force?
It all depends on what you want to fly and what you want your missions to be.
Is the A-10?
Air Force.
Okay. Marine pilots, what do they fly?
F-18s. And...
on the aircraft carriers?
Correct.
So aircraft carrier pilots...
we're talking fixed wing now.
Not the Tomcat?
F-14?
F-14?
That's a Navy bird.
I gotta brush up because I just figured someone's in an airplane, they're in Air Force.
Wow. That's why you're you and I'm me. By the way, and I don't know if I've told this story on this show, I met an Air Force recruiter who, in the 80s, said that they all had a laugh for about a decade. Because after Top Gun came out, they had a lot of kids who thought that they were going to be Maverick and Goose.
So they just signed up?
Yeah, well, they came into the recruiting office and they were, hey, I want to fly those and I'm the next Maverick.
And they're like, sure. Let's get you
and the Air
signed
Force
up.
guys, they'd sign them up or whatever. Well, obviously it's a Navy bird and let's say Navy film. And the Air Force recruiters just laughed and they laughed. You can be influenced the way that you want to be influenced. And later I learned in life that's called confirmation bias. You're going to find what you're looking for.
Right. Well, I'm sure all those people eventually had a pretty good career in the Air Force.
Yeah.
Probably pulling a good retirement now. I mean, the Air Force, not a bad. I'm starting to plant the seeds to my kids right now. This burden, like, are you saving for their college? And I was like, I got their college covered. However, I'm not telling them that.
Right.
And I'm probably going to not just pay for it just because I have the money. Call me, I don't know, right into the show if you think I'm wrong, but I don't think it's parents' responsibility for their kids. I don't. I think their kids need to show the initiative, and they need to take on that debt.
What word is this?
Ooh, rodeo mono trade? There's no O.
Try again.
Domino trade. I hate this segment.
Yeah, well, unfortunately for you, our listeners love this segment. Rhodomontade.
Rhodomontade.
Do you see it now?
Yeah. Rhodomontade. What's the definition of rhodomontade? I feel like I'm in a spelling bee.
It means to bluster, to brag.
Is this our new flexor word?
It absolutely is. Well done, sir.
Are you going to start the hashtag rhodomontade?
Excuse me, it's a noun, not a verb, so it doesn't mean to bluster. It just means blustering or bragging. It's a gerund form of the verb.
Hashtag rhodomontade.
Well, just for that.
Rodeo montade trade.
You know what that is?
Sounds like a skill saw.
That's you butchering the word. That was a grinder.
Dude. No, it was a skill saw.
I'm going to believe you.
Or a chop saw.
I
It
believe
got a little, the guy was pushing a little too hard at the end. You hear it kind of stall out.
Oh, yeah. He was definitely putting pressure on it.
So, kind of sounds like a skill saw. Like when you're cutting the wood and right at the end when it's about to fall off, it pinches the blade a little bit. Let's hear it again. Hear the pinch at the end. It's a grinder.
Oh, yeah. He's going to pop that wheel, too.
Yeah.
I can guarantee you.
Apprentice.
I can guarantee you he didn't put that nut on hard enough.
Yeah,
to keep the
almost
wheel
sounds
on.
like it is grinder with cutting wheel, cutting a metal stud, and they pinch the blade.
From financefeeds.com, OANDA Japan keeps relaxing margin requirements for currency pairs. Quote, in light of the recent market situation, the broker will partially reduce... This is OANDA Japan.
OANDA
They're
Japan.
talking about. In light of the recent market situation, the broker will partially reduce the margin rate for corporate accounts from August 17 of this year. The change will affect GBP SGD. The margin rates for these pairs will change from 3% to 2%. The margin changes will apply to the following pairs on August 10, traded on OANDA Japan FX Tokyo server. Then it lists various ones, the ones we care about. GBP, JPY, CAD JPY, Euro GBP, GBP USD, and then various others.
Well,
Now, why would they change the margin? What is the strategy there? What's the business reason?
well, I think during Brexit, they raised the margin requirements on GDP pairs.
Because there was more risk?
Yeah, it was more volatile. There was more risk. Now, it sounds like they're relaxing it. And, Japan has a different economic outlook on interest rates,
Right, we've discussed that.
which probably is helping OANDA. And they're probably trying to motivate people to trade a little bit more. I don't know. I'm not a broker. But usually when there's higher risk on a pair, you'll get those higher margin requirements, mostly as that safeguard, right? Like what we've talked about. The 7 or 9 pages you're going to fill out when you go to a Forex broker. You're going to lose all your money. statistically, you're going to lose all the money because people don't really understand margin. And you're borrowing. I mean, in order to make money in Forex, you either got to have a shit ton of cash and not trade with margin. What's one lot? 100 grand?
Do institutional banks trade on margin, or are they just using
No.
their own cash?
No.
They are the margin.
They are the margin.
Okay.
They want to create a market, so they plant billions of dollars in this pool, and they join up with brokers.
And then they take the opposite trade of the retail traders.
Right. The prime broker would be the bank. The broker, like OANDA, they used to run what's called A book and B book. Now, they might still do B book for someone who has $1,000 account, meaning they don't send it up to the prime broker because let's just face it, you're nobody.
Is it taking side bets? Like, is it if you're at a fight and you're taking side bets with your buddies versus taking bets with the casino?
Exactly. So the broker's the bookie, and if the bookie can't handle the big bets,
right,
he has a bank, somewhere. So you come up to him and you're like, dude, I got 20 on Jordan's going to hit 19 threes this game. He's like, dude, the odds on that's pretty low, and I got $20 in my pocket, so I'll take that bet. That would be the equivalent of like OANDA, and you have $1,000 account and you're taking micro lots. They're like, it's not even worth the paperwork, dude, for us to send it over to JP Morgan. Now you're throwing some weight around. Contrary to what everyone believes, the broker doesn't want you to stop trading. They don't want you to lose because the broker is making money off every time you trade.
He's getting his rip.
Right. He's getting the spread or commissions, however your account's set up. So it's not in OANDA's best interest to just take all your money because they make money on the more you trade. The prime broker, on the other hand, who doesn't give a shit about Roger sitting in his room with his $20,000 account. They got better things to do with their time. Now, don't get me wrong. They employ the best traders in the world. They have the best information. They have the fastest machines. They got algos. They got, high frequency trading systems. All these things make the markets more efficient. So we can sit there and cry and whine and all these things. But all it's doing is making the market efficient. You have to adapt. You have to get better. You have to see the opportunities. You have to exploit those, nuances. That's what we do as traders. We're speculating on price. Now, the best things to do is because these prime brokers also have business to do. So even though they have a trading desk somewhere, if any of you guys watch the financials segment when you trade stocks,
in the background,
if you look at the financials, when their fundamental news comes out, there's segments of their earnings. There's trading earnings, there's loans, and then, there's all these things, how banks make money.
So what are all those people behind the glass on the broadcast doing? Are they trading? Are they servicing? What are they doing?
On what broadcast?
I don't know. Pick one on CNBC.
Well,
Bloomberg, all the
these
people
are
behind
just
the glass.
media outlets. I'm thinking about, Deutsche Bank.
Right.
They have a trading, there's building somewhere, it's called Deutsche Bank, where it's just like you would think in the movies, not on the floor, where everyone's like, fucking blah, 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 blah. But there's a cubicle farm of all these quant traders and fucking some guy, they all have nicknames like Moneymaker and, Roger that or whatever you would nickname. T-Bone, what are you going to, I got to move $100 million a day out of CAD into the Swiss. I'm going to try to get, they're getting orders from the business side of the bank.
Okay.
So here's how it works. And any of you listeners out there work in this. I'm just piecing together how I think it works, which sometimes is right, sometimes it's a little off.
Write the show, dtpshow@allenfx.com, and we will read your rebuttal to what Clayton's about to say.
So how I have perceived this process to work from the business side. You got a banker. You got one bank doing business with another bank, 2 different countries, 2 different currencies, right? It's the reason why a Forex market exists. Hey, I got to move $100 million from sterling to Canadian dollar. For instance, let's say the Four Seasons has a big presence in Europe and a lot of hotels over there. And they generated $100 million in sterling.
100 million pounds?
Pounds sterling. Now, corporate in Canada wants their $100 million. Now, hopefully the company itself has a Forex exchange expert who knows the right time and the right people to get this deal done at the best exchange rates that they can. However, let's say they don't. Hopefully they do business with a bank that goes, all right, well, if you can wait, give me 3 weeks. No, I need it now. Right?
Uh-oh.
Right? Like everyone knows when you need money now, it's going to cost you. Why do you think cash now places are just freaking money machines? Oh my God, I want now. Because a lot of Americans or people, they get their paycheck and it's like before they can even cash it, they've already gotten a freaking front on it. Four Seasons in Canada wants their $100 million revenue that is in pound sterling right now. All those businesses were done in Europe. Now they've put the money in a European bank and now corporate needs it. Now they go, we want $100 million. The trading desk gets that order. And why the trading desk gets it is because they're traders and banks want to get the best rate possible. So to the customer, you say, hey, I'm going to need a little time. How much time do I got? All right. So then now they put in the orders. Now they don't want to move $100 million all at once because they got time. So they're going to give the trader that, you got to move it. So that's why sometimes banks will take some losses if there's a time crunch. And, that's where you could see these big orders going in the market. Big bearish or bullish candles. Sometimes that's the erroneous moves that go against your technical analysis because they just have to get the business done.
Because of their payables.
Right. Or let's say Four Seasons doesn't have time. COVID's really hitting them and they're like, fuck, pull in the money. Right? This volatility, these erratic moves, it's just business getting done business-wise. Now, don't get me wrong. That same trading desk for the bank also is deploying money-making strategies, not just business transactions. They're trading against us retail traders. They're trading against other institutions. They're trying to find, nuances in the market just like we are. They're speculating to make money. Now, let's talk about the other business. You have lots of cash, you're a bank. Let's be a prime broker. Let's just put a bunch of cash in a pile and partner with brokers who let retail traders trade against it. We don't have to employ a lot of traders. We just got, someone over to the department. But really, we're just running a bookie system. And it's great because most retail traders are banana heads. And, you're going to have the lucky few that win big. It's just like a Vegas. Put the cash in a pot and just watch it grow. Watch all these people take bets against it they don't have any education, any experience, just throwing it out there because they're in a Facebook group and so it said, buy Boeing.
Their uncles have a great lead.
Yeah, and then...
How many fortunes are lost over a fire and a few beers?
Over a fire and a few beers?
Yeah.
A fire? I'm not picking up where you're going with it.
Well, you're camping or whatever and you're drinking.
Oh, yeah.
And you're solving the world's problems. How many fortunes are lost?
Hopefully not a lot. Because I saw a commercial. It's running on Bloomberg right now where this family's at like a Funplex center. And she's like, oh, my God, where'd you get that dress? Or, some some acquaintance type saying. She's like, yeah, but you should be investing in bouncy castles. You know, and the whole premise is you wouldn't take investing advice from anyone, would you? You know, it's one of these Charles Schwab's or something. Doing anything new is going to require a lot of hard work, especially new strategies. And, you know, I'm a big stickler or supporter of when you find something that works, stick with it and try to master it the best you can. As you keep growing as a trader in this industry, you're going to have to move away from being comfortable. And you're going to have to add things to your playbook over and over and be able to adapt, because there's just nothing in this market that works over and over and over and over forever, except for maybe buying gold when the dollar's shit. It just keeps turning out to be a pretty safe bet. Now, don't really know if buying gold over 2,000 is going to pay out for anyone. Building a new strategy, understand it's not going to be easy. It probably is going to mess you up for a little bit like it is me. However, coming out of the backside of it could really be a big benefit, adding new stuff to your trading playbook or your repertoire of ways to squeeze money out of the market.
It's repertoire.
Repertoire.
C'est français.
C'est français. Repertoire. So if you're interested in chatting with all of us on the community channel, which it's, you know, I think we got some pretty good content in there. It's a little bit about stocks, a little bit about Forex, a little bit about Matt's goat. Sometimes people throw in some good recipes once in a while. Jump on over there. Just search for the Day Trading Plumber community chat on Telegram. We'll put the link in the show notes. Thank you, Matt. But we'd love to get you guys in there. And if you're interested in any of the services I provide, free plug here, go to allenfx.com. There's videos, there's free training, there is my ugly mug on there. Try to sell you courses or signals.
Thank you very much for listening. Please join us next week.
Over and out.
If you'd like to learn more about Clayton's signals, please visit www.allenfx.com. You can find me on Twitter, Instagram, and Telegram at OFPMatt.